Australia's housing markets have clearly turned the corner. Buyers are back making plans. They're looking at properties. They're approaching their lenders for finance. They're buoyed by falling interest rates, the prospect of more rate cuts to come, and a generally positive media. And sellers are slowly starting to return into the markets as well. And as a result, auction clearance rates are up, asking prices are up, and some property commentators are even forecasting double-digit growth next year. Now, we called the market bottom in our regular Property Insiders video chats a couple of months ago. So to explain what's really going on and to give some forecasts that are probably more realistic about what's going ahead, let's have a chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au. Welcome, Andrew.
Thank you, Michael.
Another interesting month. If we look what's happened overseas, things are just continuing on. The US trade wars there.
Yeah.
Donald Trump's announced in the last month a raft of new tariffs in August. Yeah. And the damage from the worsening US-China trade wars beginning to weigh a bit on the world's biggest economy. But I think Donald Trump is probably smarter than some people give him credit for. He knows an election is coming up. He's not going to let this go on forever. And the other big thing overseas, Andrew, was Brexit. Conservative government lost its majority, and now they're going to have another election. So
maybe
out there. But let's look at Australia at home. We had a separate session. We did a video just recently on Australia's economic growth, and it wasn't as good as the Reserve Bank would like, but it was actually what the market, and I know what you were expecting, Andrew.
Yes, Michael. And I guess the big issue at the moment is the Brexit mess, and how that pans out, who knows. In terms of the housing market, Michael, August was a month where all the doubts were dispelled. We've certainly now quite clearly seeing that our markets have recovered, that we're now seeing prices growth emerge, and I have no doubt that that will consolidate itself over the next 2 or 3 months as the spring market evolves. It was, as I said, just a validation over August that higher clearance rates that we've been talking about, particularly in Melbourne and Sydney, have translated into higher house prices, which they always do. Certainly, it's been a very positive month for the actual hard data to validate that our markets are responding to lower interest rates as they always have, and the prices growth is there. And we do now certainly seeing momentum in the market, confidence returning, and it's not just buyers, Michael. We are starting to see sellers coming back into the market as well. As far as your comments regarding those that are predicting double-figure growth, well, they wouldn't they? We've gone from the doomsayers to the boomsayers, and usually they're the same faces, but the product is what they're after, and that's, of course, a couple of cheap headlines, and I'm not sure we'll get double-figure growth. We still have subdued activity from investors. I think we need to see investors coming back into the market strongly, as we saw in 2015 and 16, to get those sort of results that would push median house prices up by double figures. And of course, we still have quite subdued incomes growth, and we still need incomes growth to generate the capacity to pay more for property, even though we're getting lower interest rates. And we're expecting 3 to 5% in most capital city markets next year. I think that's a reasonable result. Of course, the risks maybe at the moment are on the upside to that, but let's not get too carried away with 1 month's figures.
Well, why some commentators were suggesting that we'd get double-digit growth is last time we've had auction clearance rates in the high 70s and the 80s. That's what happened. That was last time. Today, as you clearly say, we're not getting the wages growth to give you more serviceability. We're not getting the free flow of money. So there are some headwinds ahead that I agree with you. It's unlikely to get that double-digit growth. But for home buyers, if your property goes up 3, 4, 5%, 6%.
Oh, absolutely.
In a time when your wages aren't going up, hey, that's good. And for an investor, if you combine capital growth and rental return and you get a combined 8, 9%,
that's right.
You're paying 3.5%.
And where are you going to get that? And the point also, Michael, is just on the auction clearance rates being at boom time levels. Obviously, that points to prices growth. But when we had those clearance rates previously at around those 80% plus results, we had much higher volumes of stock in the market. So it was covering a broader part of the market. We've still got relatively low numbers of properties being auctioned every Saturday, although it is picking up. There's no doubt about that. But we need to see higher volumes and to have them at 80% clearance rate to get those very strong growth outcomes. And as I said, the missing links still are investors. We need to see them back into the marketplace, and that's up to banks to a large degree to start lending again. My spies tell me that they are starting to be more interested in giving investors loans, as they should be.
Well, let's have a look at the auction clearance results. Now, they're a real-time indication of what's going on. In a moment, we're going to talk about asking prices, which is also a real-time indication. When you eventually hear median house prices, that's what's happened a while ago, more a lagging indicator. So I prefer to see what's happening on the ground. So at the moment, we're having a look at the Sydney auction trends, and there clearly has been a significant trend for the whole of this year, Andrew. And when you look at it year on year for the last 3 years, we're almost back to where we were.
That's right, Michael. Very strong August. If we look at the August data, previous 3 years, we can see quite a rebound there. Still not tracking at those 2016 levels in Sydney, which was a very strong market, above 80%, but approaching that. No doubt that it's a market that's building with momentum. And if we look at Melbourne, similarly, it's the same pattern. August has been the strongest since 2016, and as it built the same way, even though the chart's in reverse, built the same momentum. So clearly August has been the month where we really got rid of any doubts about rising strength of our housing markets. And you can see the trend there when we look at the weekend rates, that the trends there in both Sydney and Melbourne have been inexorably upwards since the beginning of the year. And of course, since the election in May, they really did start to build higher momentum. The highest rate that Melbourne recorded from Auction Insider was 84.1%. And in Sydney, they had an 80.4%. So they're quite big numbers. If we look at increments of the auction market over August, we can see sales numbers actually increased by 4.7% in Sydney compared to August last year. The value of sales was up actually as well, up 30%. Median price down a touch on a year ago, but as we know, listings were down over 19% in August this year compared to August last year. And in Melbourne, a similar outcome in terms of those weekend by weekend results, but the Melbourne median price was up rather than down compared to Sydney marginally.
While median prices are often the gauge that how the market's performing, that's a lagging indicator, demonstrating what happened a couple of months ago. In my mind, asking prices are a more timely indicator. So, Andrew, what's happening to asking prices around Australia?
We did see a movement upwards in all capital city markets except Darwin over August in asking prices. Of course, monthly data can be volatile, but these asking price measures mix adjusted, so therefore they account for different property price points within the market. So there's a little bit of balancing out there. So it's not skewed towards higher priced listings over the months. But we can see generally an increase over August compared to July in median asking prices for houses. And I think that's been replicated in some of the other data models that have been released for sale prices rather than asking prices. And we can see there Sydney, Melbourne and Brisbane of the mainland capitals are leading the charge with over 1% per month. But these numbers, as I said, Michael, they do give us a sense of the trend, but they can be volatile from month to month. So we shouldn't just multiply them by 12 to get an annualised result.
Sure. So what we're looking at is the trend and the fact that it's now, if you're looking at buying a new home, a great time to buy counter-cyclically in Melbourne and Sydney, and in Brisbane, will ride the wave because Brisbane didn't have the drop the other states had.
That's right.
If you're an investor, if the banks are going to give you money, what a fantastic time to get in when your total return compared to the money out you're going to spend is so positive. What about rental markets?
What I was going to say was your point about investors getting into the market now at the bottom of the cycle, or maybe the turn of the cycle, which we're clearly looking at, is also that we're seeing perhaps rental markets starting to tighten again. And it was interesting, if we look at the latest vacancy rates for August, we can actually see some tightening of rental markets almost across the board. And I think that even though the unit markets remain, vacancy rates in units certainly remain generally higher than houses and are not tightening. Interestingly, though, the Brisbane vacancy rate for units is falling, as well as the Brisbane vacancy rates for houses. And I think that reflects that very strong population growth now surging into southeast Queensland. But look, Sydney's vacancy rate fell a little for houses. Melbourne's fell. Again, I think that there's a duality there in terms of continued reasonable migration, but we are starting to see fewer first home buyers in the market. The surge in first home buyer activity has ended, as it was going to following those stamp duty cuts. And that means we're seeing more demand from first home buyers in the rental market. And of course, we're not seeing as many new properties coming into the market as well to rental stock. So there is a sort of a sense that vacancy rates are now starting to tighten. And I think that obviously will work its way into higher rents. Sydney's continue to fall, and no surprise given their vacancy rates, even though easing slightly, are still just under 3%. And my spies are telling me that agents are still finding it tough to find tenants in Sydney and are having to have some quite serious talks to landlords in regard to where they're positioning their rents at the moment. We're also seeing, interestingly, Michael, continued consolidation of the Perth market after a very weak period in Perth. We've seen signs of early growth. In fact, house rents actually rose over August compared to July, and that reflects some tightening of the vacancy rates in Perth. Unit rents are continuing to fall in Perth, and of course, they still have quite a high vacancy rate there. But I think the big picture, Michael, is just a sense also that the rental cycle is turning, that there's upward pressure on rents continuing generally, and vacancy rates are tightening, and maybe Sydney's starting to look towards the bottom of what's been a period where supply has exceeded demand.
Well, clearly the property pessimists from earlier this year were wrong. Yes, we've had a downturn, but downturns are normal in the property cycle. It's normal in all economic cycles. And now we are at the bottom in some parts of Australia, a little bit further to go in Perth and Darwin before they pick up. And then, of course, in each state, there are separate markets. Houses are different to units, different price points, different geography, but more green shoots ahead. Less downside available. So a good time if you're looking to buy your next home, and especially if you're looking to get into investment, to take a serious look at our Australian property markets. Thanks for this month's market update. Look forward to having a chat with you again next week, Andrew.
Thank you, Michael. And green shoots are what spring's all about, isn't it?